Melissa Armo. She's been, we actually had Melissa in at the Traders Forum last week. We did a little bit of a, what we call a ticker talk session with her, where we talked about kind of how she got started trading and kind of her backstory. It was really, really interesting. She basically is self-taught in terms of gaps. She's very results oriented, and she started trading as a result of the 2020 the 2018 financial crisis, the housing crisis. Kind of got into it. She's taught a number of traders her gap strategy. She's got a 26 point system around trading gaps. She's absolutely fantastic. We love her. You're going to love her. Melissa, let's bring you on.
Hello, can you hear me?
Yeah, I can hear you now. There's always was like, perfect. Is it going to work? Is it going to work? Let me go ahead and make you the presenter.
Okay.
All right. And I'll just make sure we can see everything and that you're coming through well and all that kind of stuff. We can see your screen. And I'll get out of the way.
Wonderful. Thanks so much for having me. That was funny. I heard that beep and I seriously thought that my smoke alarm was going off because I went downstairs before I came up here to get my mail, and there's a fire engine on the street in New York, and you never know, so you have to be very aware of those things. But luckily there was no fire, or I couldn't be with you here today because I would have had to exit.
I'm glad there's not a fire too.
So welcome everyone, and it is a very warm, even though it's cloudy day here in New York, feels like spring is coming. It's 55. Like Jeff said, I do gaps, and I'm going to talk about what a gap is today. And really, once you start trading and you really start doing it and you get into it and you start doing well, it absolutely can change your life. So I teach my method, which I only do one method. I only trade gaps. I've been doing it for 17 years, and I don't do anything else. So I really don't have to do anything else, because if I get to the point where I want to make more, then I just decide to bump up my risk or do more trades. But they're all gap trades, everything that I do. And I will tell you, today's trade of the day, play of the day, was Tesla. So we actually shorted Tesla this morning as a day trade right out of the gate. And I called puts in Tesla today. It's a completely insane trade today. I called the 300 Tesla puts today, and the stock went through that number. And I called that out for actually 2 weeks. So you could still be in the trade. It was completely insane. And for those that don't know what I do, I prefer to short. So most of the trades I do are shorts. Now I will go long. I have no problem going long. We went long, actually, Tesla last year. But today we shorted it. So I'm going to talk about what I do. If you have any questions, you can plop it in the room, and I'll see them as we go along. I also appear on television, talk about the economy, the stock market. Obviously, everyone's talking about interest rates, inflation. You could name a million reasons why we're falling or rallying or whatever's going on right now. There's so much happening every day. But I really just make decisions based on technical analysis. Even though I'm on the news and I talk about what's happening and I have to be aware of what's happening, I mostly am looking at my charts every single day. So if you have questions, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. You can follow me on Twitter, which is now X. I have to update that. Facebook, YouTube, or Skype. And again, I have a lot of videos, plays of the day, and I live in New York in Central Park, so I have a lot of nature videos even on my YouTube, and Jeff has watched all my nature videos, which I try to put things on there. So I'm really looking forward to the spring, because in New York, in Central Park, we have cherry blossom season, and it's really quick. It doesn't even last that long. It's quick and fast, kind of like a short in the market, where you can get it, and you got to get it right at the perfect spot. So here we are, it's 2025. I can't even believe it's March. Saturday is March 1st. And then in a week from that, guess what? It's daylight savings time. And again, that'll be nice. I can really tell here in the Northeast it's staying light out later. But it's time to get serious about your goals. It's 2 months into the year. If you're not set on pace, on target for the year already, 2 months into the year, you have time. But I wouldn't wait too long to get a plan of action together for what you're going to do and how you're going to become successful. If you start trading early in the year, you can change your future path. And again, the sooner the better. Because again, it's a very active time. Part of it's because we're in a new administration. Part of it's because there's all kinds of things that are happening overseas. And all of those things affect the market too. Okay? So again, volatility is actually your friend if you know how to trade it in the market. So whether you want to trade full-time, part-time, like I said, I day traded Tesla. We did it quick and early, out in the morning in a few minutes. So my day trades, I'm in and out, usually done by 10 a.m. Eastern time. And my options, I may be in trades for a week or a little bit longer than a week. But again, that's really what I consider a short time frame to do an overnight trade. But if you're thinking about trading and you want to do this seriously and something for a living, you have to figure out a way in your schedule right now to make it work. So I just had the February class, and one of the gentlemen that did my class is a doctor. He said, I can't trade every day. I said, fine. So he can trade 2 days a week. He's going to trade 2 days a week. That's what he's going to do. You have to find a way to make it work within your schedule, because, I mean, until you get to the point where you understand what to do, you learn it, you're doing it, you're proving to yourself that you can take the trades and you can make money replicating the trades that I'm calling, then you have to ease into it slowly. So I actually have the stats here for last year for 2024, even though we're two months into this year. I have the stats for 2024. This is the trading room stats. Again, profit last year with an average risk of $3,500, $901,000, $138. Good solid year for 2024. We had 288 trades in the room, 194 winners and 89 losers and 5 break-even. So my win ratio for last year was 69%. Then I have options in here, and I risk more of my options. So the stats for the options, again, 70% win ratio, but my profit was bigger for options because I'm risking an average of around $8,000 per trade. So profits for 2024 for options for me were over $3.8 million. And again, 509 trades, 352 winners, 152 losers, and 5 break even with a 70% win ratio. So it was a good, strong 2024. So over 4.7 million for 2024. So me, myself, I set goals for myself. I want to do better this year. I want to make more money this year in 2025. Again, I'm using the same system, but I want to increase, okay? And that's how everyone should look at every year. I think a lot of the problem with traders is they start to do something, it doesn't work, they lose. They stay on something, doing something, a strategy, whatever they're doing that doesn't work, they'll lose on it for a long time before they switch and flip and do something else. You know, if you recognize that something isn't working, don't waste your time on it. You know, I mean, even if you paid for a class, you didn't learn anything in it, or the system doesn't work, you pay for a subscription, it doesn't work, stop wasting your time and money on it. Get into something else so you can move forward. This I only have through actually the 13th, so I have to update this for the end of this month. Again, today we did Tesla. So anyways, 2025 year-to-date through 2/13, again, average risk around $3,500 a trade is $158,884. And so far, again, 69% win ratio for this year. We did 35 trades, 23 winners, 11 losers, and 1 break even. And then this is not updated through the last 2 weeks either. This is the options results for the year, 221,600. Again, I'm at a 72% win ratio for options. So we're doing a little bit better in options, actually. 39 trades, 28 winners, 11 users, and 0 break even. So I will try to update this and put this on somewhere on YouTube in the next week or so. But I'm busy. It's been a very busy time to trade. And again, when the opportunity's there, you have to make money. You have to go after it. So again, even if you risked half the risk I did, 1/4, you know, a third, okay? If you have a small account, you can open up a prop account. If you have a retail account, again, you can do options with a cash account. You can do 1 contract. The idea is to be green, consistent greens. Again, keep the win ratio around 77%. For every 10 trades I take, you should expect, if you're following me, 3 are going to lose and 7 are going to win. Sometimes, again, we're on a roll. Sometimes it's a little bit more than 70%. Sometimes we have huge trades, like today. You never know. You have to be active. You got to be there. I don't know. You know, I got up in the morning. I said in the room, I said, I like Tesla. This is the one. We watched Zoom. I like that too. That worked. I didn't do it. But I said, Tesla's the one. At 9:30, I didn't know it was going to go to 300. But at some point later in the morning, I saw where it was going to go. So it's kind of the thing where if you decide you want to do this, it can be very, very exciting to trade. For the people that just did the class I did in February this past weekend, they're besides themselves because of the money they've made just today, 2 days after the class. So this is real. You can do it. It's not something that is out of the realm of possibility. I think the problem is, like I said, people just tend to go negative once they start trading and losing, and then it's very hard for them to pull themselves back around. But you must do it if you want to be successful. Otherwise, you're just going to keep losing. And if you keep doing the same thing over and over again, you are going to keep losing. And if you don't think you could do it, well, then why are you wasting your time? What are you bothering with? Why are you wasting your time? Why go to free webinars? Why risk even $1? You either believe that you could do it or you don't think you could do it. You either believe that it's possible or you don't think it is. And again, I'm telling you it's possible, but you have to convince yourself it is and move forward if you're not in that space. Do you follow what I'm saying? And any questions here or comments or whatever, you can chat it in the room as we go along. So anyways, the class I teach is called the Golden Gap course. So as Jeff said, I have a 26-point rating system, and I go through and I rate the gap. If it totals 20 points or more, I take it in the direction of the gap. I'm never reversing the gap. Gap fills don't work. So that's a misnomer. People think that they do. They do not. It's momentum. Okay, we're trading momentum. Today, for example, I didn't short the market, but I actually could have shorted the market. The market fell. If you were long the market today, you lost. If you shorted the market today, you made money. Okay, so the momentum today, when I say the market, I mean the QQQ to the SPY, was to the downside. Okay, now I didn't see where we closed today because I was logging in here, but the reality is that things move up, things move down. Why do I prefer to short? Because moves to the downside happen faster than moves to the upside. Think about it. There's no emergency to go long something, but there's an emergency if you're in something and you're down and you want to exit that trade. Again, that's where we're making money shorting. Okay. Now here was another one we did. This was PayPal. Oh gosh, this was like a long time ago, but it was like about a month ago. PayPal. So PayPal closed here, gap down. We shorted it, and we did a put. Now let's talk about what is a gap. Again, this is a daily chart. This is the PayPal. Stock closed up here around 89 and change. Boom. Gap down here in the morning around 82-ish. Fell. Boom. Fell off the planet. So again, first of all, this is momentum. Second of all, this is a gap. So again, a gap is the difference between the close and the open. It closed at 4 o'clock and opened down here at 9:30 at a different price. There are bullish gaps. There are bearish gaps. Here was a bullish gap in the PayPal. Stock closed here, gapped up. Rallied. Actually rallied all the way up here. Okay. So there are bullish gaps and bearish gaps. I prefer to short. Okay, I prefer to short. Now let's talk about the PayPal here. Here was the put we did, the $80 put. I did this on this day that expired the 7th. We did it on the 4th. This was so cheap. Like, again, dirt cheap, $1.15 for one contract. I took 85, sold it at 275. Profit was $13,600 with a 97.75 risk, which was 139% return investment. I got in and out the same day. Now, what if you did one? You could risk $115. You still would have turned your money over double. Again, that's doing it here and getting out. And again, very often I call the trades in the pre-market in the morning. So I sent this out here at 8:44 in the morning. You don't do the trade till the open, okay? And then you do it. Now, if you did a smaller risk here, I'm using an average of 1150, 10 contracts. This is a good trade. For somebody that has like 5, 6, 7 grand in a cash options account, a couple of trades like this, your account's over 10 grand. Like, this is a good trade. You could have risked 1150 if you had 5,000 in a options account. Now your minimum for options is 2,000 at any broker, but you certainly could have done this. You could have done half. A couple of these, you're building your account up, and you can get your account up to then where it's a margin account. Again, remember, for a margin account, you need 25,000 at a retail broker unless you go prop. Any questions here so far? How are we doing? So anyways, we're going to talk about becoming successful. You need to become a specialist. You need a specific strategy. A strategy that reads institutional money. So I'm looking for what? Institutional money. What's happening? It's power money in the market. This brings momentum and opportunity. Every trader at every level must learn this skill set, and it can be acquired through education. So when you learn what to do, then you can apply the method and you can use it for yourself. Now, if you decide you want to join and learn it, you can join the training room with me, and I call the trades live. You can do them while you're learning. That's the benefit of having the mentoring in the room. But you could do it for yourself. Again, I teach in the class everything I do myself. So think about it. I mean, it's just common sense that if you get good at one thing in life, you'll be successful. I'm using this here, Jerry Seinfeld, because there was the SNL tribute was a couple weeks ago. Every famous person was here in New York, which was funny. They had the big party afterwards at the Plaza Hotel. And Seinfeld was in the audience. I don't know if anybody watched it. unfortunately, they didn't have enough old skits. I wish they had old skits, and Dana Carvey wasn't there. He was sick and didn't go. He's one of my favorites. But Seinfeld was in the audience, and I was thinking about it again when he started out his show. I would say everyone's seen Seinfeld. He didn't know how successful he was going to be. He didn't know he was going to become a billionaire. He didn't know any of these things. He really loved comedy. He wanted to be the best. He practiced what he did. He took time and care thinking through his jokes. He worked on his stand-up. The opportunities came his way. He did his show. In fact, when they did the first pilot, the beginning show, I don't even think it hit. When the pilot first came out, I don't even think it was successful out of the gate. And then it built up over time, and they got better, and the show grew. And obviously, he's a comedian, and he's very funny, and he's very successful. He's not a tennis player, and a basketball player, and a golfer, and an accountant, and a doctor. He's a comedian. So, you focus on one thing, whatever that is. If trading is it, if this is what you want to do, if you want to be a trader, like this is your thing, do it. You've got to get good, okay? So it's common sense when you think about it. But for some reason with trading, a lot of people think they can just 50-50 crapshoot it willy-nilly and then make money. That's just absolutely, absolutely not true. You have to understand what's going on. You have to learn how to do it, and you have to get good. I should have updated this here today. I didn't have time to do it. But anyways, this was Tesla. We've been shorting this. We did short this. Today, again, obviously this chart looks completely different. This fell all the way down, like I said, broke 300, but this was at the end of January. This was actually, it's kind of funny, this was only a couple days ago. Actually, this was the 20th, where this fell right before the sell-off this week. And this had some beautiful, beautiful, beautiful gaps in it. So we did the 345 puts. This is the week of Valentine's Day. Here I called it 8:52 in the morning, 2:11. Here, stock close here, gap down, boom, get the drop, take it over. So we did the 345s. It fell through 340 and dropped. Now, I was in this before this occurred. So how did I know this would happen? Because I got up in the morning and I saw the gap and I rated the gap using my system, and I said, this is going to go. The momentum's going to fall to the downside. And it was right, and it did. Okay. And again, it was a nice trade. Good, solid trade. Cost was $7. Sold at $21. Profit was $18,200. 200% return on investment. Again, another nice trade. Whatever your risk, one contract, 10. You could take more than I'm taking. 2 contracts was $1,400. You could have made $2,800. Again, this is a doable position size for someone with $7-8 grand in their account to risk $1,400. You see how I'm talking about here, like between this one and the other one, how you're bumping it up, I call it chunking it out. You take a trade, you chunk it. Everybody wants to take one trade and make all the money back they ever took, anything that they ever lost trading. That's not reality. You have to be consistent. You get it today, get it tomorrow, do it the next day. You know what I'm saying? You take the trade, make the money, get out. Any questions? How are we doing? Anyways, right now, it's the end of earnings season. So we have a couple of earnings. Actually, NVIDIA's tomorrow night. I don't know what it's going to do, but that's tomorrow night. But really, I'm sort of in my mind getting ready for the next earnings season, which is April. So we're at the end of earnings season. Now we have earnings, but it's like retailers usually, except for NVIDIA, which is tomorrow night. That's a big one that will affect the market. But it's a good time to learn and prep and get ready for the next busy, busy time. Okay, but we do gaps for all kinds of reasons, like Tesla today was not an earnings gap. So how can you earn a living trading? Number 1, you need a winning strategy. Learn first, then you do it. Number 2, you need to support a mentor, which I offer people. Do follow. I call the trades in the room. You can ask me questions. I teach the classes. It's all me. And number 3, become an expert in one thing. Again, think of Seinfeld. I'm an expert in gaps. I'm an expert in shorting. You implement the strategy, get good, and then over time, you can add size to win. So again, how do you make money in the market? Think about it. It's common sense. If you went long Tesla today, you lost. You had to be short that stock. You have to get the direction right. You have to determine who is in control. That's how to do it. If you can determine who is in control, you can get in the position and make money. Sometimes it happens really quick. Sometimes it happens really fast. Sometimes it takes a day or two if you're in an option, okay? But again, it's just common sense when you think about it. If you're in the right direction, in the direction of the control, then you're going to make money. So you have to get the direction right to win. If you get the direction wrong, you lose. There was another one we did. We did this last week. Actually, this kept falling too. We did a day trade in this. We did a put in this, and it went. This was Walmart. Stock closed up here around 104. Gap down here in the morning around 99. Open, rally, dropped. Again, I don't have the last couple of days in here, but this went boom, boom, boom. Okay? Fell. Beautiful, beautiful, beautiful trade. If you were long Walmart, you lost. You had to be short. And again, I like doing both options and day trades. You could do one, you could do another. Some people in the room are doing both. Some people are doing just a day trade. Some people are doing options if they don't have a margin account, whatever. It's whatever works for you. It's the idea of getting the train. Remember, a put is a short. Okay, when I say margin trades or day trades, I mean when I'm just shorting the stock outright with the shares, which I'll talk about in a little bit. Someone's asking a question. How would you exit an option position when it's not working out? I take trades to win or lose. And again, you go back and look at the stats I have at the beginning of the lecture. If I lose in something, it all goes bust. It's completely bust. If I lose the whole thing. I carry it into the last day. So if I take a trade on a Monday and it never works, it never goes in my favor, I'll bust out of it on the Friday expiration. I'll sell it at zero. So I play every trade to win or lose. In fact, I will tell you right now, that I was in trades last week that were down, and then Friday they went. I was almost completely down in trades all week last week until Friday. We sold off Friday. I was in puts, and they went the very last day. I made money in trades that were completely down. If I killed them, I wouldn't have made money. I would have lost in trades that actually I made money in. So I never kill anything. So if I rate the gap and it works in my favor to the rating, which is, again, what I use, the system, okay? Forget about, I'm not even in the trade yet. I go through the process, I'm rating it. If I get the point rating, I'm doing it. I believe in it. So it either wins or loses. So that's how I have trades that might be complete losses if they don't go. And you know what? Sometimes I'll do something, if I do it and I lose in it, guess what? I might do it out again. The following week, I might do it another week out. Like maybe I was right in the direction. I just give myself enough time. Do you know what I'm saying? So I tell people to risk less to allow the trades to work out. Because if you take a trade on a Monday and it goes against you and you freak out and want to kill it, that's crazy. Look at this market. It's very volatile. It's very crazy. I love it though. But if you have to know what you're doing. You have to know what you're doing. Because if you don't, again, you're not going to win. So if you understand what's happening, you will allow the time. Now, it's not ideal for a trade to take a week to work. I like everything to go the day that I do it. But again, that's not reality. Sometimes the market's choppy, sometimes things wiggle and jiggle, and you have to give it a chance. So you account for that in your risk, and that's why I'd rather see people, do one contract then. Go slow. Because in the end, you're going to fare better. The way that I'm doing them is actually the highest profitability, best results. Which is why this is how I do it. And to be honest with you, it's the easiest way to manage trades. Otherwise, you're second guessing yourself and you're constantly staring at the screen or your P&L and it's a nightmare. If the gap rate's good, you go with it. It wins or loses. So anyways, number one, you need a winning strategy minus golden gaps. What is a gap? A stock gap from the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. So again, I don't know what's out tonight or tomorrow morning or economic data or whatever that could move the market. If we're going to gap, we'll probably gap. I don't know if we're going to gap up. I don't know if we're going to gap down. But market gaps most every day, to be honest with you. And then here was the NVIDIA. Here's gap. Stock closed here, gap down, open, dropped. This is the end of January. So the stock was up here around 144 and change, gap down here around 125, open, fell. So that was a gap. Okay. So again, a golden gap, I keep talking about this term, is a term that I coined myself. It's what I named my system. It's a gap that rates 20 points or more per the golden gap 26-point rating system. Follow the system. Follow the system. You take the trade in the direction of the gap. You can do the trade as a day trade or an option. If you follow the system, you're going to be okay. All you have to do is consistently size yourself right. And what do I mean by that? If you're risking 500, 500, 500, that's what you're risking. You're not risking 500 to one trade, 1,500 another trade, 2,000 another trade. That would be all over the place. Because then you could have 5 winners and and like one loser, and the one loser could suck up all the 5 winners if you're all over the place, if you had too big of sizing in one. So you have to have consistent sizing, which is your responsibility. I personally, don't think that's that hard. But again, many people aren't good with math. Buy a calculator. Just buy a calculator. If you got to figure out what things cost, and or even in the margin trades, just figure out your sizing with the share quantity, you can do it. But anyways, getting back to what I was saying, you need to focus. And my focus is gaps, and particularly shorting. Shorting, and again, we did this PayPal. This was a gorgeous trade. But I didn't look at this today. This probably is around 72, 71. Where's this at today? Somebody look up PayPal. My guess is it's close to 70. It might have even broke 70 today with the market. Where's PayPal? Somebody look it up. It's probably that's where it is around today. I'm not into trading it, but maybe I should have done that. Anyways, what do? I rate gaps to the 26-point checklist. This is what you learn in my classes, is the meat and potatoes. The rating system helps me determine who is in control. If the
Okay, Melissa.
What'd you say?
I have an exact quote for you.
Oh, tell me.
PayPal closed at 74.07 today.
Did it fall?
Yeah, it had a pretty negative day.
Okay. Well, then that still could be lower. Because I think that gets back. I think that gets, we have time to look at that at the end. I think that gets to 70. 72, 70, I think that gets down. So that's something I might look at later this week, if the market continues. So thank you, Jeff.
It did break the 200 as well. It broke down below 200 and closed below 200 today. So, yeah.
I think there's very, very, very few things, if you want to scan everything tonight or tomorrow morning, whatever. There's probably very, very, very few things today that closed green. We had a very big sell-off today, and again, you could say, what happened because of this thing, that thing, the other. From Friday to today, today's Tuesday, tomorrow's Wednesday, look at where we've gone. It's almost insane. So again, I love to short. But another reason is because short moves to the downside happen so much faster than moves to the upside. I mean, if you rewind back last Monday, and then you look at today, you're like, oh my God, what the hell happened? I mean, seriously. I mean, we hit over the highs. We were at new highs like 2 weeks ago or something. Now look at it. It's like, oh my God, did that even happen? Like, that's how fast things can move in the market. And you got to be on the right side of it. And if you didn't do it and you didn't do the shorts and you didn't do anything, you missed opportunity to short. If you were long, you lost. And again, while there might have been some things you could have gone long today, I highly doubt there was much at all that actually was green today. Anyways, getting back to what I was saying, the rating system helps me determine who's in control, which is extremely important. And again, sometimes I will do the market. Sometimes I will do things that have nothing to do with the market. There's lots and lots of reasons that stocks might gap. I mean, again, something may gap because of earnings. It could gap because of news. It could gap because of the market. Again, earnings season tends to be the busiest time, but there's just so many reasons usually why things want to have big moves. And for me, I'm always looking for the momentum. Again, while I prefer to short, I will go long. Again, we went long actually in November, Tessa, which is kind of ironic. We had some great, beautiful calls, huge trades in November and December of 2024, but that was a long time ago. So gaps happen in the market on a regular basis. However, some gaps are better than others, and some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction. Either one is fine with me. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. And that is how you know when the power money will flow to pay you. So it is about reading the footprints of institutional money. You're not going to be buying research reports. You don't have the background data. You're not running a hedge fund like Bill Ackman. You don't have all kinds of information that they may have that we don't, and you never will. But you have the charts. You've got the charts. You can get the charts from Jeff if you don't. You have the live data. It's moving. And we can all see it. I mean, unless you have a crappy internet, we're pretty much seeing an electronic market exactly pretty much within seconds of the live time. So that is how we're all making the choices. If you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. But you have to understand how to trade with this side of power, and you need to know how to find it. So knowing how to read what institutional money looks like is essential to becoming a successful trader. And you can win big trading on this side of power. So again, I tend to look at a different stock every day. This was another one we did, though. This was a nice one. AMAT. Stock closed here, gap down, open, dropped. This was Valentine's Day. So again, high up in here is around 175, came all the way down, broke 170. That's momentum. And again, this was a short. It was a nice gap. So what made this fall? The only thing that's going to make this go up here from 185 to down here, boom, like that, is institutional selling, or you have people that are short. Remember, hedge funds can short too, and they do short, actually. But like I was saying, you need conviction to make money, and you get that from understanding why did this happen, how did it work. So I use a 26-point checklist, and that's how I go through the process, and this is what you learn in the class from me. There's no substitute for learning. I don't know what happens after a certain age, or people just shut down and they kind of don't want to learn new things, but you can't be like that. You're selling yourself short. You're cutting off your own opportunities to spite yourself if you don't want to open up your mind to start learning and doing something different. If you're not making this kind of money in the market, then open up your mind and learn something different and spend the time and the money to do it, because you're just selling yourself short and not giving yourself your own opportunity and your own chance to do something different and make money. I think 2025 is going to be an exceptional year to have a lot of opportunity. Everyone keeps talking about American exceptionalism and all these things that could happen for the future. While that's true, and that's great, and the economy could shift, and inflation could go down, and interest rates too, it may not happen right away, or it may be a rough ride to get there. It may be a very rough ride to get there. We rallied after the election, and now things are kind of been, basing out sideways since the beginning of the year. But look at the last 3 days, like I said. So again, you want to think, and you want to learn, and you want to study. One of the ladies that did a class over the weekend, she's a grandma. It was funny because I said something about learning or something, and she's a grandma. She'd saved up. She took the class. She's into it. She's doing it. She already did a couple trades. She did the Tesla. She made money. And it took her a while to talk herself into doing it. She's been following me for a while. It doesn't matter how old you are. 35, 45, 55, 65, 75, you can learn something new. Okay? As long as you're alive and your brain is working, you can think through these concepts. And again, while I'm teaching you, I'm calling the trades so you can mimic them and do them at the same time as me in the room. So gaps are the most powerful show price action in a chart. Gaps have large moves. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. When I trade, I'm looking for and trading momentum. Then whether you have a small size or large size, you will get a good risk to reward. And you got to stay within your size. I called a trade today, and I put in the notes, and I said, stay within your risk. It was pricey. It was expensive. And everyone should always do that. It was a note. It was a note I put in the letter, because sometimes people want to go hog wild. There's time to go hog wild. We're not going hog wild yet. I'm not shorting the world at this point. We could break off. I don't know. We're still in an uptrend in the market. That's the truth. But I'll know when it's time to go hog wild and put more risk on. For now, we're doing what we're doing, and we're making money doing it. But again, you have to stay within your risk. That's another thing I've noticed with traders of teaching people for a long time too, that they are all over the place with their sizing. And buy a calculator. It's not that hard. I have an old calculator. I think I've had it for like 30 years. It's right next to me. I mean, I'm good with numbers, but it's here if I need it. Now, remember we were talking about interest rates and inflation. There's a Fed meeting in March. That's going to be interesting. It's going to be very interesting, because I don't think they're going to lower rates this year. Now, they may fake it and pretend like they're going to, just to keep the market, up. But I don't think they're going to end up lowering rates this year. And if they do, it's going to be very late in the year. So whether or not they say the truth or not in March will be interesting to see, because things aren't really warranting that, because prices are still too high. So again, you can have all kinds of opinions, and I go on TV and I say, I think this, I think this, I think that. But at the end of the day, I make my trading decisions, my investment decisions, my decisions with my money. I make what I see in the chart, not on what I think this guy's going to do, because nobody really knows what he's going to do. And even if you listen to what he said, he may not even do what he said. He may change his mind. Look at 3 years ago. Look at the last 4 years, actually, of how things have gone. They've revised the numbers every single time. They said they were going to raise rates umpteen times in 2024. They didn't do it till the end of the year. So a big flow of money going in a certain direction is what moves the market stocks, creates momentum, and sets the trend in charts. And when you're looking for institutional money, you are really reading the side of power in a stock. You want to be on the side of the power. in order for you to make money trading. Institutional money is in charge of the market and stocks at all times, and even if you think it's not, it actually is. So number one, learn a good system. Number two, you need to support a mentor, do and follow. Again, consistency, which is in sizing and executing the strategy. Now, I put the 1 week, the first week here of November in here, the trades that we did. These were all trades in the room. 2, 3, we did NVIDIA, which was here. This may not look like much, but it actually was a gap. Stock closed here, gap down, open, dropped, and we shorted it. So this was the trade. Entered at 114.05, exited at 113.55, boom, $1,500 in and out, done. Again, I'm usually done in the morning very quickly. Then 2-4, we did the PayPal. It's kind of funny where I got out of this. I got out of this at 80.35. I'm trying to look for $1 every day, but look where it went. It went all the way down. Again, it's easier to hold an option. I think this came all the way down, broke 78. Was a really nice trade. 27.50, this was 2-4 PayPal. And then we did AMD on the 5th. Lost to the AMD. This failed. Stock closed here, gap down, reversed. I had a loser in the AMD. This was the 5th. And then we did Uber. Uber was a nice trade. Uber was a big trade. This was here. Stock closed here, gap down, open, dropped. I did the Uber. It was the same day I talked the loss on the other one, made 9,700. Again, these are all day trades where you have to have a margin account. And then we did Ford. Ford was a good solid trade then. On the 6th, stock closed here, gap down, rallied, dropped. That was earnings. And then we did QCon, which was a little baby one on the 6th. Here was the QCon. Stock closed here, gap down, open, dropped. That was a short. And then Amazon was the big one on the 7th here. So this was the Friday. Stock closed here, gapped up. Gap down, fell, boom. Actually, I called to put in this in the last week. It was really, really good trade. This is one of the things that sell off here with the market in the last couple of days. So that was on the 7th. So again, you put a week together, chunk it out. Monday, Tuesday, Wednesday, Thursday, Friday. Again, you may have a trade that loses. You put in the stop. It's a limit order stop. Again, these are trades on margin, so I do use stops. I do limit order stops for my day trades. Again, my stop and my option is my full risk, whatever it is. So that's my stop. Again, if you want to kill something, I wouldn't advise to do that. Just take lower risk. So this 1 week of real results was 23,343, a good solid week. And again, hard to believe that was almost a month ago now because we're almost into March. But like I was saying, focus on quality. It's very important. When people enter my trading room every day, they expect to win. They have no idea what I like till they sign in, they log in, we do it. They're expecting to win. Like tomorrow, people are probably like, oh my God, what's she going to call today after Tesla today? But, some days there's a million things. Some days there's one or two. Some days there's a big one. Some days there's a baby one. I don't know. I don't know till I get up myself. I get up very early and I start scanning and I start looking for everything, but I like to win. I don't like to lose. Okay? Any questions here so far? And again, we mostly short. We chunk it out. We short in the room. Occasionally we'll go long, but I'm looking for the best short. And I'm trying to get in and out very quickly, ideally 5, 10, 15 minutes. It's about working smarter, not harder. I don't want to sit at the computer all day. Unless I'm teaching a class or doing a webinar, I want my day to be done in the morning. And getting back to the philosophy of shorting, like I said, it's about panic. We're shorting the panic. That's why things fall faster. Again, I have no idea where we go from here with the market until I get up tomorrow morning and see the market gap. But what if we do continue to sell off? Man, oh man, the panic that's going to come in. What if they do actually say in 2 weeks that they're not going to lower rates at all this year? Or it's not looking good? The market probably will have a negative reaction to that. So if you don't know how to short, you're going to miss out on an opportunity this year. The market was very bullish the last 2 years. 2023 and 2024, you could have gone long a lot of things. You could have gone long every dip. In the market, it's not advisable right now to be doing that. Not even since the beginning of the year could you have made money doing that. You have to have a skill. You have to have a strategy, and preferably one that doesn't need the market. Now, again, we're talking about getting a strategy, following the mentor, and then becoming an expert in one thing. You focus on one thing, one strategy, one system, and I'm even very focused in one direction. Even though I will go long, I'm more focused on the shorts. This helps me be consistent, that I can see really where something's going to go, and I can see the weakness in the stock. And again, if I don't find a good short, I'll go long. but I really do prefer to short. So I'm excited about the last couple of days. I'm excited about where we could actually go. You know, I think that if you want to stick on top of something, you have to stay with it to get good. That's the only way you're going to see all the money that you want to make. And again, people tend to be very impatient. But if you're chunking it out every day, over time, you're going to be able to achieve your goals. Sometimes it doesn't all come in one big trade. Sometimes it's just a series of green, 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 and having less losses. When sometimes people are losing for a while, they just never really get to that point. But anyways, getting back to what I'm saying, in order to be consistent, a person needs proper focus on what counts. For me, I focus on stocks that are being moved or controlled by institutional money, and how do I determine that? I rate the gap. So how are you going to know what stock to trade each day? If you decide to take my class, you will get up in the morning, you will learn the system, and you will rate the gaps yourself. Then you log in the room, I tell you what I like, what I rated, and then you would say, oh, Tesla, I saw that too. I liked it, it was good. And then that helps you learn it, and you go through it, and then you get ready to trade. So again, it's all about finding the power of money. Are they going to buy the stock today? Or are they going to short it or sell it? So it's a process. It takes, using your brain. Gaps have to be qualified. I don't short every bearish gap. I don't buy every bearish gap. I don't go long every bullish gap. I don't short every bullish gap. It's not that easy. And again, if you look at 1,000 things in a day, most things are nothing. Most things are crap. Most things aren't good. Unless you get the market power trending with you, most things will go with the market, and the market's very tricky and doesn't always go in a direction you can predict at all. So again, finding something that's specific where you don't need the market is the best case scenario for you to have consistent profitable trades. If I get the market's help, Friday was a good example of that. The market power trend on Friday, that's very, very rare. But it will, okay? And so it's great to be in a setup where you have everything on in the right direction of the market when that goes. But I tend to try to want to find things where I don't need the market. Like Tesla would have worked today without the market. I think Tesla got to the dream piggy target today with the help of the market. But it would have sold off anyways. Like again, we did it right out of the gate this morning from where it opened. But the checklist tells you what to look for in the price of the stock. And again, here's the Walmart we did. This was a nice one. I didn't see where this closed today. This had 3 days down. Friday, it was Thursday, Friday, Monday. Today was up a little bit. I don't know where this closed, but this was a nice one. Any questions here so far? Okay, we'll keep talking. The most valuable information for people to trade can be found in reading price action and gaps. Understanding chart reading of gaps and how important the patterns of price are in the market will assist you in being profitable. Reading power money when it sets up will help give you conviction to trade. I think when people start trading with me, they get more conviction too because I make calls and then they go on to work and they say, how did you know how that would do that? Because I'm not a psychic. I know how to read the gap. That's how I'm doing it. It's in the chart. I just know what to look for. That's all. Seeing when and where the power money positions are getting in is like finding a gold mine. It truly, truly is. Because again, all you have to do is add a couple zeros on in size to your chart, to your trade, and you can make more money. You can't do that till you have it, but it gives you goals for the future, a way to see a way forward where you can take a small account and build it. Seeing gaps clearly and how they are creating trends, changing trends, and making momentum is a powerful way to trade. You can use this information to enter trades yourself so you can get paid along with the power money moves. So the system tells you how, what, and when. How to make money in the market, trade a strategy in a system that is profitable. Golden gaps are a highly profitable strategy because they focus on large momentum to trade. What stock should you trade? Stocks that gap and rate 20 points or more per the 26-point rating system. Trade the gap in the direction of the attack. So I'm never reversing it. So like if I rate it and I said, well, this isn't going to go down and it's gapping down, I don't flip it. Okay, I don't flip it then. When do you trade them? Early in the morning, they open when they set up a trigger. And you must have a structure in place to make any money at all consistently. It's about the consistency that many traders lack. So it's not about size. You make more money if you have more size, but if you're not consistent, then you can't risk a lot. So, I mean, again, I would rather see people take 100 shares, one contract, show the consistency, then they can risk more. And again, like if you even have a small account, you can risk more if you know what you're doing. It's just that a lot of times people have to go through that learning curve. It doesn't have to take a year. Could be a week, could be a month. It'll be a couple of days. It depends how fast it takes for you to grasp the concepts. Omar's asking is an alert service. The live trading room where I call the day trades, you must be there. There's no alerts. The newsletter, the options newsletter, is a newsletter that gets emailed to you. So I don't know if you consider that an alert. It's not a text. You have to have an email account to get the options newsletter. How do I know ahead of time where stock will go? I rate the gap. I use a 26-point checklist. This checklist tells me what to trade and what to look for each day. It measures gaps by rating them on the daily chart to find stocks that have, number one, a high probability of directional bias for the entire day, preferably, like Tesla. A big move of the day, again, like Tesla. Early confirmation of the bias in the move between 9:30 and 10, again, like Tesla. And precise entries with follow-through. And a good risk-to-reward target potential, which was Tesla, too. That's what I'm trying to look for every day. That's part of trading. We don't trade the same stock every day. It'd be impossible. You don't have the same stock gapping every day. There's a good gap every day. So again, you got to put a plan of action in place. It's almost March. Get organized. Spring. Change of seasons. Good time to get organized. Say, I'm going to create a money management plan for myself. I'm going to make this much money a week. I have this much money to put in the trading account. I have this many days a week I'm going to trade. I'm going to do options. I'm going to do day trades. Whatever you're going to do, get yourself organized. It's up to you. Everybody's schedule is different. People live in different time zones. I had a guy this morning who said, well, I got to get up early. I said, rate gaps at night then. Rate gaps at night then. Figure it out, okay? You are closer to realizing your dreams than you think. This is real, and you can do it. It's real. People are doing it. I have people with me for a long time. I have people with me who are brand new that are making money. It's real. Follow your dreams. You've got to get serious about it. There's no shortcuts. Everybody has a different journey. Everybody has a different plan. Everybody's doing different things. This is one of these things where you've got to get serious about what you're doing, okay? And be practical and professional. Think about your risk. Think about your trades, You worked hard for your money. You don't want to take crappy trades. You don't want to take trades with no system or no strategy. So anyways, the system I use to find the gap each day is called the Golden Gap 26-point rating system. It's a checklist. This is what you learn in the class. So you can learn it all, make 2025 your best year yet, and empower yourself today to trade. So the class is called the Golden Gap course. It's a complete system to use to trade. And again, the February class is this past weekend. So the next class is not till March, okay? But you can get in and you can start trading if you want. It's a full course in how to strategically find, pick, and play stocks that are professional bearish gaps. So the class for March is March 15th, excuse me, and 16th. So it's right before St. Patty's Day. So you have about 2 weeks, and you can get in and you can start trading with us beforehand. It's a class in how to find, pick, and play professional bearish gaps. Class tuition is $69.99. Everyone pays the same. Classes are online, and again, you get a login. I am doing a spring forward special, again, for daylight savings time. This is going on through March 9th. So this is available today. You can sign up today, start trading, but this ends on the 9th. It includes the trading room free through the end of the year and the options newsletter free through the end of the year if you sign up for the Golden Gap course by March 9th, which is daylight savings time. So again, very, very interesting times to trade. There's a lot going on. There's a lot to do. Today was an exciting day. We're going to have other exciting days. We'll see where we go. I'm not short the QQQs or the SPY because I don't know what NVIDIA does. And again, NVIDIA reports Wednesday night. The market could completely flip with NVIDIA or it could continue to sell off. I don't know. So that is what I'm watching for this week. NVIDIA might not be playable. It might not even be a good gap, up or down. I don't know. But it would be a great setup if it actually does something decent. So I hope so because that is a fun stock to trade. To go long or short. It's a big mover. It's a big mover. Any questions from anyone about anything at all? How are we doing?
Yeah, we have a question from Omar. He wants to know if you offer an alert service or a signal service.
I have a newsletter, which is an options newsletter, which the trades get emailed to you. So that is a service which is $49.99 for 6 months for the subscription or $69.99 for 12 months for the subscription. But again, that's free till the end of the year if you do the class for March, going on with that special through the 9th.
Cool. Those are all the questions that I see in both YouTube or GoToWebinar.
Wonderful. Thank you so much for having me.
Oh, of course. Always. So Melissa at thestockswoosh.com. Thank you very much, Melissa.
Thank you. Have a great night, Jeff.
Will do.